Alright guys, so what's going on? Today I'm gonna show you guys how to catch trades on Ethereum. Using fair value gaps. If you don't know what fair value gaps is, I do have videos going more in depth on what fair value gaps are and how to catch them. This video is just solely me showing how I catch trades on Ethereum using fair value gaps. Right? So let's isolate some areas that we're gonna be using today. Yeah, one thing about Ethereum, it's another volatile pair, whatchamacallit, like Bitcoin and gold. So it could be a little annoying at times, but you know, this is how you predict Ethereum and where it's going on the crypto. This is a tight uptrend. You know what? Let's do it. That's crazy. I'm just grabbing stuff because it just works. It doesn't really matter where. It just works. It just works. So why did I use these? Because I'm trying to find out the trend. So initially, before you even start doing anything, you need to find out the trend, right? So if you're more seasoned and you know how to identify trend, you obviously see this and just know it's an uptrend. You know, yeah. You see this, you know it's an uptrend. Ooh, you know what? We don't need this. We don't need this either. When you see this going down here, right? You off whip, no, this is a downtrend. This right here, this in the box is a downtrend. You know, this in the box is an uptrend. So we're only gonna be using these two boxes today. Notice how this is a bullish trend, this is a bearish trend, and I'm gonna show you guys how to identify it in the video. So first, what you do is identify the trend. How you know it's a trend, because this low took out this high over here, and formed this high. You know, it's like a zigzag. Like, if it's a zigzag going up, then it's a bullish trend. If it's a zigzag going down, it's a bearish trend. That's literally what it is. See, like simple stuff. Like, you know, that's how you know this is a bearish trend. Like, you know, like, yep. So this took out this high, so that became the new high. Before it decided to come back down and take out this high and form low highs. So how do you do it? So let me high, low. Right. High, low. High, low. Yeah. Yeah. So basically, as you can see, it's like a zigzag. High, low, broke this high, low, broke this high, formed a high, dropped back down to form a new high, low, went back up, formed a high. This high took out this high. So that's why it's a high. High, low came back down, formed a low, came back. This high, low, broke this high, formed a high, came back down. This high, low, broke this high, formed a high. Okay? So it's like a zigzag. See, look, zigzag. You know what I mean? Zigzag going up. So that's how you know it's an uptrend. It's really simple, right? So let me... bullish. That's how you know it's a bullish trend. Okay? So now, right, what are we doing? Right, we're gonna enter doing a time, and that time, if you watch my other video, is the same time always: 8 a.m. Eastern Standard Time and 11 a.m. Eastern Standard Time. Right, once you identify the trend, you're waiting for 8 a.m. Eastern Standard Time and 11 a.m. Eastern Standard Time to find an entry for you to enter. Right, so after you do that, what are you looking for now? Right, so once you identify that it's a bullish trend and this high was formed to make this high low, what are you looking for? Fair value gaps. So what is this fair value gap? You're taking it, you're pulling it out, right? You're looking for another fair value gap. Now I want you guys to be to know that, see how this 1, 2, 3 over here is a fair value gap? I'm not using that because I'm only looking for bullish trend. So I'm only gonna grab fair value gaps bullish trend. For a bullish trend, okay? What is this? 1, 2, 3. This is a big fair value gap we can use over here. See, 1, 2, 3. I'm gonna take it, pull it out. You know, just keep looking for bullish fair value gaps. All these are bullish fair value gaps. You know, this one is not one because look, the first, second, and third candle, they overlap like that. 1, 2, 3, they overlap, so you can't use it. So this would be invalidated. You know, yeah, there's a fair value gap here, so you could pull it out. 1, 2, 3, and then draw one there. Is there a fair value gap here? Yes. So we just identify all the fair value gaps. You see 1, 2, 3. That's going up. Bullish trend, fair value gap. You take it out. Right. What else? What are we doing? I gotta stretch this one out a little bit. What are we doing next? Fair value gap 1, 2, 3. You could do these. It's up to you what you want to do. As long as this high keeps holding and keeps getting taken out, then it is considered a bullish trend. But notice how, so you could do this fair value gap here. Why not? We're going off of it. Say, imagine that there's nothing that happened outside of this box. This is where current price is at right now. That's how we're looking at it, inside this box. So we're only gonna work inside this box. Okay. So now that we identified the fair value gaps, now we're gonna wait for the time. 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, right? So every time that time comes and happens, that's when we look for entries, all right? So high low is formed. This high low took out this high right here. So that's when we start looking for bullish entries. So boom, we're waiting for price to come into this area before we enter at that time, okay? We're waiting for price to come into the fair value gap around 8 a.m. Eastern Standard Time, 11 a.m. Eastern Standard Time. Right? So fair value gap here. Let's wait. Boom, 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 boom. Look, 7 a.m. is not the time, so we would ignore this. 11 a.m. Yeah, it's within 11 a.m. So we could enter this if we want. So that would have been our first entry, and our stop loss would be below the first candle. I always say below the first candle just to give it room. This is the initially first candle, so stop loss would be down here, and we would hold, wait for price again See, price went up a little bit. We would hold. This is Saturday now, 11. Look, this is all, like, as you can see, 11 a.m. You can see that, right? Like, but price is all the way up here. Even though it's time, it's all the way up here. So you wouldn't enter it. There's nothing here indicating that the entry. There's no fair value gap. Price is all the way up here. Price is supposed to be inside of this fair value gap for you to even take an entry. So it would be like no point. So you would wait again. Look, price came back down. 7 a.m. This is 11 a.m. If you wanted to, you could enter that, honestly. So you could have like another entry here if you wanted to. That's 2 entries. Notice how price went back up, came back down. You're waiting again. You're not entering any trades that's here. Look, 11 a.m. Yeah, that's within the time, but I wouldn't enter it because it's all the way up here. It's not next to the fair value gap. So you would wait again. Look, price came back down into this fair value gap. Guess what time it hit it again? 11 a.m. So that's another entry. That's 3 entries now. So notice how every time at 11 a.m. the next day, price came back down and gave you another entry. It's helping you guys out. Then look, finally gave it the last final entry and then it flew up. So that would have been 3 entries on Ethereum, right? Fair value gap was formed here. So now we have 3 entries on Ethereum right now. A new fair value gap was formed here. We see it. We're waiting for price to come into it. See, price coming in. Look at what time it came in. Look at it. If you can see it. Look, you see the wick? Came into the fair value gap. Look at what time it did it. 11 a.m. This would have been another entry. This 11 a.m. right here would have been another entry. Stop loss will be below the first candle. So 1, 2, 3. It will be below this candle. Just to give it some space. You know, you never know. Notice how, look. Even though this is a little huge of a stop loss, it's not that big. Honestly, you feel me? So as long as you stay within this fair value gap, notice how, look, price, if you had entered here, stop loss would have been a little bit lower. There's a chance for you to get taken out. Look at how deep this fair value, this candle went. This 7 a.m. candle. Look at how deep it went down. You know, you would still be good. You know, this would have been what? 3, 4, 5. This would have been the 5th entry. Yeah, so it would have been 1, 2, 3, 4 right here. 5th entry. You know, because within the fair value gap. So look, 11 a.m. right here is within the fair value gap right here. So you would have been another. This would have been a 5th entry. Then you would have held. So that's 5th positives right now. You have no losses right now. Waiting again. Look, there was a mini fair value gap formed here. If you can see that, look how tiny it is. But what time did it do it? Look, 3 a.m. and 7 a.m. both are outside of your time, so you wouldn't enter this one. So you're still good, you know. A new fair value got formed here around 11 a.m. I mean 7 a.m. right? But you're waiting for price to come down here. Price 11 a.m. Look, 11 a.m. Price is already up here, so it's outside of the fair value gap. You wouldn't even enter this one. You would wait again next day. Price came into it at 7 a.m. Price went into it at 11 a.m. Price is in it. So you would enter this buy, right? But you would have got taken out if you enter this buy. You know, you can't win them all, you know. Like, it just happens. You just can't win them out. You would have got taken out right there. And that's perfectly fine. If your stop loss is below the first candle, you would have still been good. Like you know, like, you would have been in, you would have won. It was like 1, 2, 3, 4, 5. Yeah, you would have been in 5 entries and lost 1. So out of 6 entries, you would have lost 1. You know, you still would have been good. You know, and guess what? This high right here never took out this high low. See? Actually, you know what? Yeah, it did take out this high low. So you would have been taken out. You would have been 5 entries, and before it switched over and formed this high. You Yeah, it went back into this fair value. You know what? Yeah. So you would have been good. It entered this fair value gap and then flew up, made a new high. Yeah, there's a fair value gap here, but if you look closely, it never touched your time. This 11 a.m. is already below the fair value gap, so you wouldn't even have entered this trade, honestly. So you would have been 5-6 right now. 5 wins, 6 loss. 5 wins, 1 loss. So that would have been a good bullish trade before everything went back down, and but by then you would have already switched over as a bearish trend, and I want to show you guys how to catch a bearish trend right now. But this would have been a nice little. I'm gonna write it down here. You would have took 5 entries and lost only 1. So you wouldn't have 5 out of 6 wins. Alright, so you would have been deep in profit in that week, or in that month. Now, how do we identify a bearish trend? This is a bearish trend. How do we know that it's a bearish trend? I'm gonna go ahead and put the time as well. So as long as you know the time, you're good. It's the same time every single day. Like, it's nothing changed, right? So how do we know this is a bearish trend? Right. Let's just focus about what's in the box right now, right? So we know it's a bearish trend because it's going down. Like, if you took out a zigzag, you started drawing it. What is it? Started the zigzag up here, down, boom, down, boom, down, boom. It's going down. So you just off whip know it's a downtrend. Like, you don't even gotta overthink it. But if you want to do it the technical way, this high took out this low and formed this new low, then pull back, form this new lower high, then pull back down. Did this take out this? No, it just touched it. Did this take out this? No, it just came. So it's within this. That's consolidation. So you wouldn't even enter this. You would wait for it to break down, like right here. Take it out, pull it. Alright, since this took out this is a new lower high. The lower low. Went back up, formed a new lower high, came back down. Made a new low. Right? And you would just be waiting. Did this take out this? No. So that would be like a whole new lower low. But since it's outside the box, we're gonna ignore it. So once you've identified the trend, this will be the high or low. Since that got taken out, the trend got broken. The bullish trend got broken, and it formed a lower low. Then a lower high. Then a lower low here. Then a lower high. Then another lower low. So yeah. So now what do we do next? Same thing we did with the bullish trend. We just look for fair value gaps after this high took out this high low to form the downtrend. We look for fair value gaps here. What do we see? Fair value gap here. How do we know? 1, 2, 3 candles, fair value gap. Another fair value gap here. 1, 2, 3. You're just making these things as fair value gaps. You know what I mean? You're just looking for fair values. 1, 2, 3. This is another fair value gap. Pull it out using a rectangle tool. What other fair value gaps can we use? There's one here. 1, 2, 3. This little tiny one here. Stretch it out. What other fair value gaps do we see? Why can't we use this one? Because this is a bullish fair value gap. So we're not looking for bullish trend, we're looking for bearish trend. So look, 1, 2, 3. This is another fair value gap. I'm gonna get rid of this. make this more smaller, but yeah. So as you can see, this is a boom, boom, boom. This is a fair value gap right here. We're gonna use this fair value gap because we're not looking for bullish trend, but we're gonna use this one. 1, 2, 3. Fair value gap. We're just looking for fair value gaps going down. What else? 1, 2, 3. Fair value gap. What else? 1, 2, 3. Fair value gap. So that's the last of the circle. So now what are we doing? Now that we identify the fair value gaps, what are we doing? Do you guys remember? Yup. We're waiting for time. So after this high, took out this high low. We're only focused on everything after that. So lower low, lower high. What are we looking for? Time, right? So we're waiting for price. This is a fair value gap here, right? 1. This is the first fair value gap here. Waiting for price to get into that at around 8 a.m. to 11 Eastern. So look, 8 a.m. right here, right? This is the 8 a.m. This is the first entry. And that's the thing, like stuff like this could happen, right? So the first candle would be that one over there, which is up here. This is the initial first candle right here, right? 1, 2, 3 of the fair value gap. So the stop loss would be above that, right? And what happened? Price never took you out. Look at that. Never took. Look, I want you to see that. You know, because you got to give yourself room. Look, price never took you out. Came back down. You know, formed another fair value gap here. But look at what time this is. 8 a.m. Nice little entry right there. But the entry would have been up here. Nice little entry right there. Price will never took it out. Because remember, the only time we enter is when the candle closes. Candle closed at 8 a.m. And everything else after that, because this is the 4 hour, remember, so you're not really entering on the 4 hour, you're entering on a lower time frame, but they're just entering on the 4 hour. Look, after this candle closed, you would have had a nice entry, you would have never got taken out, everything would have been perfect, you would have still been holding. Another fair value got formed around here. Let me pull it down. Yeah, which I identified right here. And what time did it go back up there? 4, 5, 6, 7, 8. Look, 8 o'clock. Then we would put this wick right here is the 8 o'clock wick. We would put a stop loss above the first candle, which is this one over here, which is the 8 a.m. candle right here. That's the first candle. So it's gonna be above it, and we would hold. Look, price never hit you back out. Never took you back out. Came back down. You're holding. You're holding. You're holding. No other real fair value gaps for you to enter. You're still holding this trade. Yeah, there's a fair value gap here, but guess what? Like, look. Like, you're gonna see fair value gaps, but we're gonna ignore them as long as it's out of our time. So look, this is a fair value gap here that was formed. But guess what? See? 1, 2, 3. But see, look. Look at what time it went up there. 12 a.m. We're not entering at 12 a.m. So look, price went all the way up. So you would just totally ignore this. You know, so you would have had, right now, just as like, think, you would have had one entry, 2 entries right now on Ethereum short. So you would have been 2 in profit. You know, now you're winning, you're winning, you're winning. Let me shrink this. You're waiting, you're waiting, you're waiting, you're waiting. Look, what do you see here? You're waiting for, look, this is another fair value gap. You're waiting for price to get up here before you can use it. This is 16 o'clock. You wouldn't even use this 12. Yeah, price touched it, the fair value gap, but it touched it at 16. So you're honestly going to miss out on this trade, this sell. And that's perfectly fine. You're not going to catch them all. You know, like, it's just discipline. Look, this is the 8 a.m. thing. Now look, this is the 8 a.m. Look, it formed a fair value gap here around 8 a.m. Yep. So it formed a fair value gap here around 8 a.m. But you're waiting for price to go back up there during time. So even though it did all this, you're still waiting, going back up at 12 a.m. Look, price touched it at 12 a.m. You wouldn't enter this, so you would miss out on this. So you missed out on 2 trades now, and that's perfectly fine. You're 2 trades up. You missed out on 2 trades. That's perfectly fine, because if you keep holding, you're still in deep profit. You know, so you're still waiting. You know, it's okay to miss out on trades. You don't gotta always find. You don't always have to trade. You know, right now you're 2 in profit. You don't gotta worry about those other 2 trades. Look, another fair value got formed here. Just waiting for an opportunity. Look, price never went back into the fair value gap, so you would just ignore it. You know. Another fair value got formed. Another fair value got formed. Price, look at the time, 12-2. Look, 8. Price went up here at 8. If you wanted to, you could have entered this. You know, yeah, the stop loss is gonna be huge. You know, but again, it's really up to you. Me personally, if the stop loss is that huge, I wouldn't take it. Look, like, I wouldn't take this trade. The stop loss is too huge, so I would just ignore it. So again, you still would have been two in profit, 2 trades in profit. And look, price just kept going up. Price just kept going up. This lower high originally never got taken out. So look, price just went going up. Alright, came back up into this fair value gap here. Right, at 1600, so you wouldn't even take that trade. So again, two trades in profit. Like, you wouldn't even take this trade right here, even though it hit a fair value gap here. Look, you wouldn't take this trade. Why? 1600 is not 8 a.m. Eastern or 11 a.m. Eastern. It's not 8 a.m., 9, 10, 11, none of that. So you wouldn't enter it. You would just ignore it. And look, price went all the way up. So it's a good thing you didn't take that trade. You know, so you would have been in this right here because of patience. You would have had 2 wins. So your win rate would have been 2 this week or this month. 100%. Your win rate would have been 100% this week. You know, like, you don't gotta take every trade. You still would have made money. And that's how you identify fair value gaps on Ethereum, and that's how you enter trades, and that's how I enter trades. That's why my win rate is so good, so high. And you know, that's just how this works out. You know, if you guys want to check out other videos on how I identify fair value gaps and how I trade them on different charts, please watch the next videos and check out the playlists. Alright, and let me know what videos you guys want to see next. Thank you.